everyone. Now in this session we're going to be getting to grips with China and their role in the next phase of globalization. Globalization, the process of countries becoming more interconnected around the world, is taking on a new and slightly different format. We're going to have a little look at this in this lesson, and we're going to try to understand what potential responses China can actually use, given that globalization does lead to certain externalities. Okay, so firstly, globalization accelerates growth, but it also amplifies disruption. And of course, we've seen that within the Chinese economy, as well as in foreign markets, of course, where China has enjoyed rapid economic growth as a result of their investment and export-led model. But at the same time, there has been a lot of disruption with structural changes and structural unemployment in many Western markets, okay, particularly in manufacturing sectors. Okay, so it does amplify disruption. So as a result of this, it has meant that some Western countries are beginning to look more inward when it comes to their trade policies, perhaps most notably Trump and America. Okay, so when we consider cross-border flows of goods, services and finance trade across the world, we can see that in 1990, $5 trillion worth of goods were traded across borders, representing 24% of global GDP. Now by 2007, that had really reached a bit of a peak in terms of the actual global GDP, 53%. Then the recession hit, the global financial crisis, 2007 and 8, and at that time we had $30 trillion worth of goods in cross-border flows. Okay, but we can see that by 2015 this number is below what it was in 2007. Okay, and further to that, as a percentage of global GDP, it's far, far less than it was, almost 20% less. Okay, so for China, this is a concern because, of course, they still continued to rely upon their large current account surpluses. And according to the economist Yukon Huang, they will do so for the foreseeable future. So a process of deglobalization would really damage Chinese growth. So China do not want this to happen. Okay, so we're going to look at some of the ways that they can help to manage this situation to ensure that globalization is seen as more of a force for good. Okay, it's first notable to take a point from these key trends that have been seen within this process of globalization. That globalization really drives the process of urbanization and moving towards higher, more productive levels of output. Okay, of course that's posed problems in China with the negative externalities that urbanization has driven. But we know that China needs to continue that process, albeit along a cleaner and greener path, so that they actually manage that process of urbanization to a much, much better degree. Okay, further to that, we can also see that global trade has become more digital in the volumes of trade. So digital file sharing and digital sales of goods and e-commerce, of course, this is representing an increasing proportion of global trade and is expected to continue into the future. So that trend will continue and grow. Furthermore, there's demographic changes, okay, that need to be concerned. And when it comes to the period from 1980 through to 2010, 1.2 billion people globally came into working age, or came into the world's working age population. So that has been another force really driving forward globalization over that period. Okay. So the question then becomes, what sort of demographic changes will we see within China and across the world further down the line? Certainly China has aggravated part of that problem with the one-child policy, which of course has now been reformed to the two-child policy effectively. So what changes can we expect further down the line there? Okay. when it comes to the negative externalities, yes, there's the concerns regarding climate change, of course. The fact that more economic growth does increase pollution, and it does have those negative externalities which are driven via that process of increasing GDP. So that's certainly an interesting point. And of course, China have identified that they need to improve the actual quality of their economic growth so that it is greener and more sustainable, but also that China will want to actually pioneer much of that innovation to sell in markets abroad. Okay, so we've also got the role of volatility in markets. The fact that a more interconnected world can be a more volatile world, where financial contagion, financial risks can spread quickly across markets because global finances are far more interconnected, and global trade is, of course, more important than it used to be. So this means that there can be sudden shocks which can cause various problems in terms of demand for exports, or in terms of financing current account deficits or budget deficits abroad. Okay. And finally, we've got this point regarding inequality. Now, it's interesting to note here that globally, inequality has actually reduced. Okay, the catch-up growth, thinking back to the Solo model here, the catch-up growth that LEDCs have enjoyed as a byproduct of this accelerated economic growth has enabled a catch-up phase to begin with many of those economies. China, of course, is a prime example here. But within countries, inequality has actually risen. So while global inequality has come down, within countries, inequality has actually risen. So that's a really, really important distinction to make there. And of course, we see that in the Chinese market between those who were owners of key assets against those that were perhaps migrant labourers who may well be heavily exploited by this process. Of course, we see it in Western markets as well, by those in manufacturing industries that have been made unemployed, while as those in services, financial services in particular, have done very, very nicely. Okay, so what responses have China got? We've mentioned the point about the importance of sustainable and clean energy. Okay, but other principles that can be used: outward foreign direct investment to other LEDCs. So this is important, and there's a number of ways that China can do this. Of course, we've seen the one bridge, one road, but China needs to help other LEDCs climb the economic ladder. In essence, they need to help invest in and share their skills and know-how in low-end manufacturing with other countries. Perhaps they will really drive this process with the Bridge and Road Initiative. Be interesting to see. What else can China do here? Well, they can also invest in digital and more service-based aspects for a digital-based economy. So improving telecommunications, for instance, to allow smartphones markets to develop. Turkey is an example there of where they have actually invested quite heavily in the telecoms industry to ensure that there is a market for smartphones to really help drive economic growth there. Okay, now what else have we got? Well, we've also got the fact that China need to essentially practice what they preach, and that is that they need to open up their domestic markets to allow competition from abroad. That will help to improve their dynamic efficiency, their degree of innovation, but it will also help to show the world that they really mean business when it comes to not protecting their own industries and particular sectors that may be dominated by SOEs, for instance. Okay, further to this, the need for good corporate governance. Again, China really need to promote this to ensure that the governance of their companies is solid and is really looking towards the long-term health of those companies rather than short-termist approaches which we saw in the run-up in the West to the financial crisis, of course. And final point, which I've just squeezed in on the bottom here, is there a role for China to become a global provider of public goods? So is there a role for China to be seen as the good guy? Remember what we talked about in our last lesson, where China can be seen as a strategic threat to the US? Well, perhaps they can actually just tackle some of the market failures that occur around the world. Now, this could be in response to humanitarian crises, or it could perhaps be providing education-based services in overseas markets to help promote lifelong learning, particularly in some of those areas where there has been certain negative externalities created. So in those manufacturing areas within MEDCs, can China actually think about getting involved there to actually help correct those problems with structural unemployment and so on? Okay, so some interesting themes there. Again, this is really high level stuff, all right? So just thinking about potential ways forward for the Chinese economy here is really important, okay? But I hope that's useful. All right, thank you.